Hello everyone and welcome to this month's property market update for the UK. This has been a very interesting month, guys. I think we're seeing a shift back towards the more stable average property growth. We've been through 18 months of steroids. The property market in the UK has been on more steroids than Chris Benoit. Now the steroids have run out, guys, and we're moving more towards more normalized growth levels. And the best way to highlight the growth that we've seen since the beginning of January 2020 is to look at the data from the Land Registry. Now this graph here shows you the monthly growth in property prices month to month. So if we whiz back towards March 2020 to April 2020, that's really when the global health crisis broke out. However, what you see from that point on in the UK going into May, roughly May all the way until we'll say November, you're seeing a 1% increase in house prices per month. Now, 1% per month doesn't seem like a lot in nominal terms, but if you have 1% growth per month for a whole year, we're talking about 12% by the end of the year. Now, to put that into context, guys, the average annual growth in properties in the UK over the past 10 years has been 5%. So we're talking 12% compared to 5% during a global health crisis. That is more than double, guys. The UK property market really has been on fire for the past 18 months. Now, let's talk about this dip right here. As you can see, we haven't seen a dip like that for more than 18 months going backwards. What is driving that, guys? Well, the data seems to be telling us that we're seeing a stabilization of the overall UK property market. Now, whilst prices are close to 6% greater than they were last year, what I want to draw your attention to is this monthly change number here. We're talking about below 0.5%. If we go back to May and we look at this column right here, the monthly change number, from April to May, prices grew by almost 2%. That is crazy. Then from May to June, just under 1%. From June to July, again, just under 1%. And then from July to August, we're starting to see a slowdown, 0.3%. So actually shrinking from one month to the next. And then if we fast forward to this month, August to September, gone from 0.3% to a slight increase of 0.3%. So what are we seeing, guys? Overall, we're seeing that the rate of increase in prices is slowing down. Bubbles don't last forever, guys. They can't last forever by nature. And I found some data for mortgage approvals in the UK, which appears to confirm this slowdown. So if we go back to this column right here, which is March 2020, when the global health crisis broke out, understandably, you see this huge dip in the amount of mortgage approvals going on in the UK. So you're going from a high of just under 73,000, huge decrease down to 9,000. But then you see this huge spike way up to 103,000 mortgage approvals per month, which is beyond, way beyond what we were seeing even pre the global health crisis. And if you've watched some of my other monthly updates, you can go back and watch those. Reason behind this is primarily twofold. You had the stamp duty holiday, and you also had the search for space, which the global health crisis catalyzed. People didn't want to live in crowded urban cities anymore. They went out and they started buying properties. They started moving to larger properties in more rural areas, suburban areas. And that's not just a trend in the UK, that's a trend globally. So you've got this peak in mortgage approvals around about November time last year, and you're seeing a steady decrease from that high of 103,000 to, funnily enough, the level that we were pre the global health crisis, so around about that 70,000 mark. And as we saw at the beginning of this video, house price growth is starting to normalize. That average of 5% growth per year that I mentioned works out to around about 0.4% growth per month. And we see here it's 0.3, so basically thereabouts. And what you see in this table below is a breakdown of how that change is spread across first-time buyers, which are properties that are between 1 and 2 bed, second step properties that are properties between 3 and 4 bed, and top of the ladder properties that are 5 bed and above. So 5 bed and above properties have grown the most, followed by 3 to 4 beds, and in last place 1 to 2 beds. And again, the reason for this, as we mentioned at the beginning, is that overall over the last 18 months, people really have preferred bigger houses with more space, more bedroom in more rural areas. We've almost seen a case study over the last 18 months on how a social crisis, i.e. this virus, affects the property market directly, affects people's choices when it comes to property. So moving on, let's look at the trend in asking prices. So on this axis here, this is the average asking price in the UK, and this is the month. And as we saw with both the land registry data and also the mortgage approvals data, from March onwards, you see this spike in asking prices, which corresponds with the amount of people buying houses, i.e. the mortgage approvals. In translation, there's basically more demand for houses. And when there's more demand, you can raise your asking prices, because as a seller, you've got more people basically competing for the house that you're selling. So you're in a position to raise the price. And we peaked out at round about July, according to the rightmove data. And you can see this leveling off. We're no longer heading for the moon, guys. We're leveling off, and the property market is cooling down in the UK. And guys, more monthly data to confirm this. This graph right here is basically the percentage growth month to month as opposed to the price of properties in the UK. As we just said, big spike from March to April in the average price of a property. That continues to May, through to June and July, cooling down, but still at 1% or just under 1% growth per month. And then August to September, really getting close to basically the zero mark as the property market cools. And before we look at the regional trend, this is also a good metric that confirms what we've been saying. The average stock per agent, which is basically the average amount of houses that each estate agent has to sell, is declining. So as we saw from the previous graphs, prices peaked around Q3, Q4 last year, and corresponding to that, you see a peak in the amount of houses that agents had to sell, which makes sense. If prices are skyrocketing, more people are going to say, hey, let me get on the market and sell my house right now because I can get more than I would under normal circumstances. And that has steadily come down and down and down through to August. We're at the lowest level we've seen for over a year because the property market is cooling. And then let's have a look at what's going on in some of these regions, guys. On this map here, I want to draw your attention towards the dark shaded areas of the UK versus lighter green shaded areas. Now, the dark shaded areas basically mean that there's been an increase in the prices from the last month to this month, i.e. from August to September. So Scotland has seen an increase in house prices from last month to this month, and so has the southeast and southwest region of the UK around here. If we compare that to last month, i.e. July to August, a lot more growth. Most of the UK had grown from July to August, with the exception of Yorkshire and the Humber and London. And if you go back further just 3 months, i.e. to June, the whole of the UK was growing. So steady decline, basically. You can see that the light shaded areas of the UK are growing because the property market is cooling down. Let's see what's happening on a regional basis. So Scotland actually is doing really well. So is the East Midlands, 2.4%. Wow. Southeast of England is doing very well, and so is the Southwest. These are still healthy numbers despite the overall cooling down of the UK property market. And then lastly, let's see what's happening in London. As we just saw previously, the overall average growth in London from August to September was 0.4%, and this is broken down here on a borough by borough basis. Barking and Dagenham, Bromley, Westminster, Bexley, all quite affluent areas actually, are doing well compared to last year. However, month to month, as we saw last month, despite London overall struggling over the past 18 months, it's not been one of the regions of the UK that has experienced growth in the same way as a region like the Northwest, for example, has, talking cities like Manchester, Liverpool, Sheffield. There are still areas of London, still boroughs of London that have actually grown over the last 12 months. Look at the top 3 in promotion places: Barking, Dagenham, Bromley, Westminster. That's interesting given the average price of a property in Westminster. Not sure what's actually driving these. Let me know in the comment section below what you think is driving the growth on last year of these top 3 boroughs in London? Doesn't seem obvious to me. But then let's look at the relegation zone, the bottom 3, Haringey, Camden and Islington. Again, let me know what you guys think. Before we end, let's look at some property news around the UK. Let's have a particular look at Wales. Now, even though we just saw that Wales is one of the regions of the UK that saw a decrease from August to September, overall it's still one of the highest performing regions in the UK, as we can see from this news article title here. The year-on-year price increase in Wales is just under 11%, which is very good, and the average price of a property is topped out at £215,000. And if we scroll down, we can actually see a regional breakdown of how the prices vary across Wales. If I just zoom out slightly, and forgive me in advance because I'm about to butcher some of these names, but we can see that in Wales you've got the capital city Cardiff down here and Swansea's around here. Now the regions that are experiencing the highest amount of growth are Conwy and, well, Carmarthenshire. For all of you Welsh viewers, let me know in the comment section below if I've not done a bad job of that. But you've got 20% growth in the last 12 months in both of these regions. Similar to London and the rest of the UK, the capital cities of the region are experiencing the lowest growth. So this is where Cardiff is 2.5%, which isn't terrible in the midst of a global health crisis. However, we know from this video and my past videos that it really is the more rural suburban regions that are driving the levels of growth in a lot of the regions across the UK. So outside of Cardiff here and Swansea here, it's these regions, the more rural ones, that are driving the growth, and some really robust numbers around Wales. And this is another article that I found that really echoes what we just saw in the other article. What I want to do is scroll down to the section where it lists all of the towns or local authorities, to be specific, in order of growth from July 202. That's a long period. I think they mean 2020 to 2021. I know we're in September now, but you know, this is still a good proxy. So we just saw in the other article Conwy right at the top. Glamorgan, I've heard of Glamorgan. Let's have a look at where in Wales exactly Glamorgan is. It's this region just outside of Cardiff. Zoom in a little bit more. So this region here, again, got the capital city Cardiff there, another city Newport there, Glamorgan looking very green, surrounded by, got a river nearby, and lots of green country around it, again in keeping with what people across the UK are really looking for right now. And then as you scroll down the list towards the bottom, you see the cities like Cardiff and Newport towards the bottom, and Swansea as well. Interestingly, the prices in Wales are still really good value. On average, it looks to be around the 200,000 mark, even in the main cities like Cardiff and Swansea and Newport. Really good value in that particular region of the country, guys. And then in other news, what I wanted to have a quick look at, guys, is the short-term rental sector, particularly in London. Now, for those of you who don't know, short-term rentals or short-term lets are basically your Airbnbs and your booking.coms. So it's people who are either traveling to another part of the UK, perhaps to work or to visit, or holiday makers. Now, what's been happening? So we know that short-term lets, in fact, Airbnb actually banned them for a long period during the global health crisis for obvious reasons, to reduce the risk of the spread of infection. So let's look at occupancy, because that's a really good metric to look at when it comes to short-term lets for the Airbnb and hotel sector. So occupancy is basically how many of your rooms available are filled. So we can see that to July, occupancy was just under 70%, which was an uplift of just under 9% on the previous month, so you know, good increase there, and up 36% on the previous year. So what this article is telling us is that in 2020 occupancy was round about the 32% mark, so less than a third, for obvious reasons. So what is this telling us? It's telling us that people are looking to travel more, the restrictions have been lifted, people have that freedom of movement once again, and they're keen to move around, visit other cities, go on holiday, go and visit family, travel for work again, all of that. And if you're a person in the serviced accommodation sector could be a very good time for you, because as people throw off their shackles of lockdown, they might not necessarily be able to travel to all of the overseas countries that they want to, but as an alternative, they'll certainly be thinking about going to stay in locations within the UK. So again, if you have a property and you're thinking of going into service accommodation, now could be a good time. So guys, that is my summary of the property market for this month. I hope you found this useful. Like, comment and subscribe, and I'll see you guys soon.